Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, investors in China's bond markets are getting nervous. But first, China's announced a 10% reduction on its import tariffs for cars and car parts. That reduces it down from between 16 and 35%, rates that had been in place for a decade. However, it is expected the main beneficiary will be European luxury cars rather than American ones. In the US, banks are reporting record quarterly profits in the first quarter of 2018, a result of new tax laws favouring them, regulation rollbacks, rising interest rates and a stable economy. Their net interest margin widened to 3.32%, the highest in 5 years. And the Federal Reserve's latest report on the economic well-being of US households finds it has generally improved over the past 5 years. It found that almost 3/4 of adults said they were doing at least okay financially in 2017, and that is up from 65% in the first survey in 2013. And the recent rising and strong growth in world trade has brought an even stronger growth in investment in modern container ships. Capacity has now outstripped demand, and even the largest are having earnings woes. Some have said that it will result in a cutback on services where overcapacity is the worst. New higher fuel costs are also a new threat. The overall impact will probably see much higher freight rates soon, especially for regions like New Zealand where competition is not so fierce. In China, the rising level of corporate and SOE defaults in their bond markets is eroding confidence for others in that market. Investors in the $10 trillion market are showing serious risk aversion. Yields are rising for corporates and availability of funding is being restrained. The Chinese private commercial sector is very much debt-based rather than the equity-based one elsewhere, so this is serious. In Australia, it's now clear that coal-fired facilities saved both Victoria and South Australia from blackouts this past summer, and that also needed some large key industry users to shut down so that households weren't affected. The strong push to shift to renewables there is up against a capacity reality, and the public policy mood is swinging back to keeping the reliable coal-based backup systems in place and updated. US Treasury 10-year yield is now at 3.06 and virtually unchanged from yesterday. The Chinese 10-year is at 3.71%, that's down 1 basis point, while the New Zealand equivalent is at 2.85%, that's also unchanged. Gold is unchanged as well and still at $1,292 an ounce in New York. Oil prices are stable today and are just over $72 a barrel in the US, although the Brent benchmark is pushing up higher, now just over $79.50 a barrel. And the Kiwi dollar is unchanged as well at 69.3 US cents. And the cross rates were still at 91.4 Aussie cents and 58.9 euro cents. That leaves the TWI at 72.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.